All right, so I had this key level today at 68.40, 68.50. So I'm going to break down how I look at lower time frame order flow at key levels. So the first thing to note is I never trade the first tap, right? I expect the first tap to be swept, and I'm looking at these two taps to determine who is in control. So what I'm looking for here is specifically our first tap, 18 for 201. So we see a lot of blue delta, aggressive buyers, right? And the market rejects lower. Now when price moves into the zone, we have our second tap over here. We saw 0 for 46, 16 for 30, 137, right? This is a red candle, but what's interesting is that we had a lot of aggressive buyers and the market broke below the zone. I like to use the candle that breaks below the zone, so the bottom of that candle like this, right? So I look for an entry after two taps and failure of aggressive buyers, right? So what we saw was aggressive buyers, aggressive buyers, aggressive buyers, and we break to the downside, right? Now, what's interesting, when we have our rejection, our retest, right? This is a retest, and this is where I look to go short, have some trend line liquidity, right? Basic concept, we just target this down here. That's it, nice and simple. So, right, I think just about here. Now, again, what made this a valid trade? If we have positive delta in the market, found resistance, right? Market ultimately tanks.